Those are a few things that you got to keep in mind. Let's get in Mayuresh Joshi to talk about his thoughts in the markets currently. Mayuresh, good having you. Good morning. Thanks for joining in. We'll try and get in Peter Maguire to talk about crude as well. But Mayuresh, just wondering, without getting into what the crude prices could do, because I mean, unless you have a view there, welcome. But I don't know how it's possible to predict so much. But with the presumption that crude prices are going to stay lower for the time being, would you believe that the crude price beneficiaries and what within that pocket might actually stand to gain over the medium term?
Morning, Neeraj. No, so I think we are coming out with a very interesting report on oil and gas. So I'll definitely forward that our take in terms of what our expectations is in terms of crude and crude dynamics in general. But you're absolutely right. I think the way the markets are behaving at this point of time, the key beneficiaries who use crude or crude derivatives at their input costs are going to significantly benefit over the next few quarters, because it doesn't look like crude is going to have a runaway rally of any sorts from the levels and the demand conditions that it is probably at this point of time. So is there a momentum trade? You're absolutely right. And I was hearing your morning piece. I think aviation, though I think a key beneficiary, I think with the Lagarde and lockdown effects that it has seen, I think the revenue hit itself will be quite substantial. So I think earnings substantiation for crude fall probably does not fall fit for aviation. But yes, I think paint companies, for example, some of the adhesive makers, I think these stocks can very well be in momentum, because almost 20-25% of their input costs, which are crude or crude derivatives, actually come off substantially. But the other element, Neeraj, is, and that's why I'm saying it's a sentimental or momentum trade, is how the demand comes back, because you're obviously going to see volumes as well as realizations come off as well. So I think there is going to be an offsetting effect to that degree in terms of earning expectations being muted for the better part of the next few quarters or the annualized basis for coming financial year as well. So yes, momentum trades absolutely possible. Paint companies, adhesive makers, I think absolutely will show positive momentum if crude prices behave the way they are and they stay where they are.
Okay. Mayuresh, the other big traction that we saw yesterday was banks. Now, banks is one thing, but the battered and bruised NBFC pocket is piggybacking on that, isn't it? Yesterday was the first day. I heard from a lot of experienced dealers, Mayuresh, that this week could belong to NBFCs. My question is, what could be the reason? Let's work with the hypothesis that NBFCs might do well. I'm trying to ascertain why is it that NBFCs would do well in the short term. Any thoughts?
So Neeraj, I think 2 to 3 broad angles that I can probably perceive of. I think the pain that the NBFCs are going through, and it's not just because of the COVID crisis, even pre-COVID crisis, the kind of deacceleration that you saw in the overall growth prospects, whether it was the advances growth, the stickiness that you probably saw in terms of the collection efficiency, specifically for microfinance companies, for various reasons put on. And the third element, obviously, is the elevated provisioning that was required because of the stress that they had to recognize, specifically towards the unsecured lending exposure into their books as well, whether it's SMEs, MSMEs, whether you're talking about unsecured credit in terms of personal loans, so on and so forth. So that's the first angle that one needs to consider. The second element, obviously, is in terms of the borrowing element that NBFCs themselves have. But the large part of the borrowing chunk comes from diversified sources. So banking sources, NCD market, the CP market, yes, housing finance companies, NHB market. And the third element of these kind of corrective actions that are being taken, both from regulators' perspective.
Mayuresh, sorry, I'm losing your line. So we'll try and, Mayuresh, just wondering, what does all of this do to Reliance? There is a rights issue, and we'll talk about Reliance in detail as well. But okay, let me rephrase my question. We'll come to Reliance individually in a bit. What does this do to upstream companies, the mammoth fall and the volatility in crude prices?
No, so again, 2 elements here, Neeraj. First, obviously, I think the dependence in terms of crude oil realizations obviously is going to hit upstream companies pretty hard. Because when you probably talk about last quarter's numbers, the average realization was anywhere between $60-62 a barrel. When you're probably talking of that being crashing, and as Peter Maguire was saying, I think if prices are expected to stay abysmally low, you're probably expecting to see that entire trickle-down effect come down to the bottom line. The second element that also needs to get observed for upstream companies is the gas pricing. Now, since gas pricing has got revised to $2.32 per MMBTU, I think the kind of gas numbers that upstream companies produce, I think that's surely going to take a hit in terms of top line growth as well. Again, for a company like ONGC, for example, I think their overseas operations through OBL, with realizations going down on a global scale in terms of Brent pricing, we're obviously going to see that trickle-down effect. Though I think the partial offsetting effect happens to rupee depreciation in terms of the realization effect. What this also does is that the capex that they probably put forth starts coming off significantly because they need to protect their cash flow from operations. And as cash flow from operations become constrained, the entire dividend payout argument probably goes for a toss. So I think upstream companies are in some sort of an earnings pains for a prolonged period of time.
Well, thanks a lot for that. And before I get to Amit Harchekar, I'll be compelled to ask Mayuresh about Ambuja, a showstopper performance, Mayuresh, of sorts on cost control. We've seen what's happened to ACC post those numbers. What do you expect Ambuja to do today?
Yeah, very good set of numbers, Neeraj. So I think apart from the volume miss at 5.76, I think that was given pressures. But what has probably happened is the EBITDA per ton. So as Nikki was mentioning, I think at 1,045, I think better than most analysts on the street. And it's the presence of their key markets, North and West, which are still holding up, both in terms of pricing as well as demand expected to bounce back very, very strongly. Now, as the plants start functioning partially and in full capacity over the next few weeks and months, I think the stacking that will happen from an inventory level at the dealer end should be quite substantial over the next few weeks. Yes, you're entering the monsoon season, but that's one of the weakest quarter for cement companies. But the second half, or the quarter 3, quarter 4, should be a very, very strong quarter for Ambuja. So yes, I think remain positive. Anybody holding on should continue holding on.
Okay. Well, so do watch out for all of those trades. Now, Mayuresh Joshi, a couple of insurance-related questions because that sector might well be in focus today. First, HDFC Life numbers. The stock had rallied a bit ahead of the numbers yesterday. Did the numbers inspire you enough to make a fresh investment here?
So Neeraj, again, I think if you probably go through the transcript and the expectations that the lockdowns probably had a say in terms of how the premium collections were for the quarter gone by, as you can very well expect, that when you're probably trading into the weakest quarter, which is Q1, along with lockdown pressures, I think that entire number will get accentuated in terms of the degrowth statistics that one are expecting about. The second element on an annualized basis, I think the numbers still stack up pretty well. So I think the overall insurance premium growth is around 12% with the new business premium actually growing 15%. The value of new margins for the entire year itself, and just leave aside this quarter, I think have been held about 25%. Yes, I think the solvency hit has taken place, but I think there were a couple of exposures, both in terms of the Yes Bank exposure, which took a hit of almost 2% for that, and the fall in terms of the erosion for equity value prices as well. So I think if you adjust for all this, I think the annualized numbers probably look far more decent at this point of time. The embedded value itself at 20,900 crores, I think is growing at a very, very reasonable clip with a return on embedded value at 80%. And persistency ratios on the 13th and the 61st month still held out to be pretty well. Longer period of time, I think underpenetrated, it still remains to be one of the sectors that one would look out for. Short term, the pain might exist. So I think investors holding on with the medium to long term, you should continue holding insurance stocks, including HDFC Life.
Okay. Mayuresh, yes, Axis Bank numbers today. The Economic Times, of course, reports that there is a likely deal announcement that could happen as well between Axis as well as Max Life. What kind of impact do you think this has on Max Financial? Because the stock had already rallied a bit, maybe in anticipation, maybe otherwise, because all financials are up. Do you think if this deal gets consummated, there could be upsides for Max Financial?
So let the deal get consummated. I think it happened. It was expected last time as well, Neeraj. So I think at what valuations does it finally go through? I think this is some element that we probably need to look out for at this point of time. Again, I think there has been a lot of traction in the stock itself. So I think it might very well turn out to be the case once the news is out that you've actually bought the rumors and sold on the facts that's come through. So no specific recommendation on Max Financial at this point of time. But for the bank as a whole, I think like IndusInd, I think the management commentary, I think Q4 might be a little bit on the softer side, both in terms of provisioning, accentuated asset quality pressure is getting played out. What happens to the watch list is something that I watch out for. So the funded exposure at 5,200 as on the last quarter, the non-funded at 3,300, which added an element of telecom exposure. to that book. Whether that book probably gets enlarged because of MSMEs exposure as well, and what kind of slippage number are we looking at specifically from the corporate side? Because last quarter was almost 63% of the overall 6,200 which came from the BB and below book. So I think these are numbers that will be more interesting to look out for. Max, I think, would largely be a play in terms of what numbers get announced surrounding the deal itself at this point of time. So Axis is where I'm more concentrated on in terms of number of.
Okay, well, that's a bullish call on Max Financial, I would have to say. Mayuresh, point is well taken, though. Fundamentally, you wouldn't want to get into some of these names until the deal is out. But, well, let's wait and watch what happens. Economic Times report suggesting that the deal could be announced today with the Axis numbers. Let's wait and watch. It'll be an interesting one. Axis results, fundraising, and if this deal gets announced, then this deal. So 2 or 3 things that you would be watching out for. Now, the pocket that was so active yesterday was specialty chemicals, wasn't it? And Mayuresh might think that every time he's here, we ask him about it, but he tracks this space so closely, Mayuresh. Now, I'm forced to ask this to you. This update by Aarti Industries is so robust, and the kind of gains that some of the others made. I don't know if you track an Alkyl Amines, for example, but what a big move in that stock the last few days. Any thoughts on these 2 names first?
Yeah, so I think as a space, it looks very, very interesting, Neeraj. So as we've discussed in the past as well, I think this space is something that will hold on over the next few quarters and years as well. There might be some disruptive forces at play because of lockdowns in this quarter and the next quarter as well. But the longer term trajectory probably looks very, very robust. So for example, I think the order that has come Navin Fluorine's way, for example, I think, and kind of execution that they'll start doing over the next few quarters, I think is going to be hugely accretive from an earnings perspective. So a lot of players within this space should benefit. I think the niche players specifically in terms of provisioning of key materials for a lot of diversified industries globally, I think should benefit even stronger because of realization growth, volume growth, and therefore earnings growth. So yeah, as stocks within this sector, I think stocks like Aarti, Navin should continue doing well and remain extremely positive on that.
Any thoughts on Alkyl Amines, Mayuresh? It's not as, it may not be a specialty chemical stock, but it's got some chemical element to it, and the stock has done very well.
So you can very well hold on to that because I think the products that they've got at this point of time are extremely robust. I think the expansion that they're doing at this stage, yes, the realization growth and the EBITDA hit might still come through because of the profile of the products that they're doing at this point of time. But I think the capital allocation strategy that the management is doing, the realization and the overall volume growth for all the key products taken together at this point of time, I think they're very, very strongly placed. You look at the competitor, I would not like to name that, but again, I think the capital allocation is a little bit off track on that one, at least in the past. So I think Alkyl probably remains better placed on all these key parameters. So yeah, it's a clear hold. I think valuations is the only thing which is probably disturbing me because they've got stretched a little bit too far. But anybody holding should hold on because the prospects for a steady earnings growth would still continue for this one over the next few quarters.
Okay, IndusInd starting off 10% higher. Ambuja Cements 5% higher at 181, so not that 10% up move, but IndusInd is locked rock solid out there, 448 at the end of the pre-open session. Mayuresh, for somebody holding, may I request you to become a bit of a fundamental trader, if you will, Mayuresh, and tell me if somebody is holding on to IndusInd in the portfolio, would you continue holding on or would you swap out of this strength into something else in the financial space?
So largely, I think how the results come through is going to largely determine the financial performance. So I think Axis Bank's numbers will also start determining how the entire banking sector, specifically the larger private sector banks, move. The second element from a book value perspective itself, I think on a fundamental scale compared to standard deviations and what we've seen in the past as well, I think it is trading below book for a period of time over the last few weeks. And the expectations is that it will over the next few quarters as well, in terms of the adjustments that they need to do, both in terms of loan growth, how they probably adjust their liability franchise as well at this point of time with deposits going off, but there is healthy deposit mobilization as well. So I think the stock might react, as I said, for positive numbers, but do I have the fundamental scale over the next few quarters? Because the next 2 quarters might actually start determining the entire trend in terms of how do I determine the book or the adjusted book for IndusInd. So yeah, from a fundamental trading perspective, the stock can very well give moves as I believed, and the uptick probably seems to be so. But I think if you're making money out of that from a trading perspective, I think keep your stop losses. Amit will be the right person to guide that and take money off the table if you're making money over a shorter period of time.
Okay. Well, Reliance Industries, of course, was a buy given by Amit Harchekar, 1450 and counting, 1.42%. Mayuresh Joshi, between Reliance, I'm asking you a tough question. Between Reliance and Bharti Airtel, if somebody has to buy one name, which one would you suggest and why?
It's really tough. No, so I think the results will be very, very key to watch out for Reliance. But both the stocks are having their own dynamics. So with data consumption going higher, expectations of constrained capex, African operations still holding up. The raise that they have done ensures that the AGR dues are paid off. So Bharati probably, even on an EBITDA basis, still remains a hold. For Reliance, again, I think the news that has probably come through and the expectations of GeoMart kicking off quite significantly. I think the debt deleveraging that comes on the balance sheet and the feedstock exposure that I've got even for the refining business, I think that should probably hold up GRMs. With the new IMO regulations, I think the GRM should also hold up compared to Singapore or the other upstream companies. I think to answer your questions, Neeraj, if anybody hold on to both the stocks.
Mayuresh Joshi, for somebody who is feeling left out, should this be a buy, this rally?
You have to be very, very selective, as I said, Neeraj. So I think how the earnings hit will start translating in the next, for this quarter and the next quarter as well. I think that's going to have a substantial say. Yes, I think stimulus packages have been announced. We are expecting one coming in from our Indian markets, for the Indian markets as well. So with that respect, I think the momentum might continue, but I think it's going to be a range-bound trade broadly for our markets. The broader markets might still continue outperforming. So specific pockets, as I said, I think pharmaceutical very, very selectively, specialty chemicals, where I've remained extremely bullish about, and selective on certain consumer discretionary stocks as well in the broader spectrum. I think these three large pockets should be something on the investors' radar at this point.
Okay, Mayuresh Joshi, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your perspective. Really appreciate your time.